please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, well, we thought the markets would crash for a whole host of reasons, from Trump's election to Brexit and to Italy and Greece. Perhaps leaders are not as invincible and as indispensable as they think. But for the moment, let's look at more immediate concerns. The depositions which give the feeling that President Trump probably lied did trouble the US markets, but the global markets were also troubled by the fact that with no negotiations coming in, the US tariffs on $16 billion of Chinese goods kicked in, and the retaliatory tariffs also kicked in. So for whatever reason, you did see the bears having an upper hand, or the bulls at least profit-taking. For me, the worry is that in India, there are a couple of... The tariff war is not a negative for us, it's a positive for us. Normally, when there are tariff wars, people look at us as actually a safe haven, because we anyway were not beneficiaries of the global supply chain. What's negative for us is that crude has climbed a little higher and dollar has climbed a little lower. That combo is normally bad for India. And we already had yesterday the rupee ending at all-time closing lows, 70.11, and the bond yield also had snaked up to 7.88. On top of it, if you have even incrementally negative news, and also we have now fears that the July GST collections are going to be subpar. I mean, these are, of course, early indications. So all told, it gives me a feeling that yesterday's profit-taking, at least in banking stocks, is likely to continue.
Okay, Lata, hi, morning. Anuj, morning. I'm most interested in the flash that we are seeing on our screen. Well, I'll come to that in a bit. Before that, you mentioned the banking stocks. I mean, this week, although the index has not moved much, the PSU bank index is down 1.5%. The Nifty bank is down 1%. So there's been that kind of underperformance. Anuj, morning. You get a sense, you were telling us yesterday that, crude could be a bit of an irritant. Yeah. It has been. I mean, what it's done is put the lid on the market up move. Yes. You think that could be the order of today as well?
Yes, Sonia, morning. Just to repeat the point I've made 2 or 3 times, as Kevin Spacey said in 21, always account for change in variable. There's a bit of a change in variable that we had. Yesterday, the market gave you a warning sign that, look, crude is at 75. Perhaps you want to back off a bit for banking. And in fact, yesterday, the entire move was oil. You have Reliance, which propped up the index. The Nifty was in the green. Let's not forget that. Yesterday also, we had all-time closing high. The Nifty was in the green. IT stocks have done well. That's, of course, the rupee move, which also is somewhat related to crude. In fact, if you look at this month, the Nifty is up 2%. The bank Nifty is up only 1%. That's actually severe underperformance. And the second biggest index, IT, is up 5%. That's a huge move that you have seen. Now, sometimes when moves like these happen, today it could actually be a bit of a reversal of that, because the big move has already happened in the other direction. Also in the banks, what is really interesting is that this month, this Axis, which is up 15%, ICICI, which is up 11%, and still the Nifty Bank is up only 1%. And the reason for that, of course, is that the Hdfc Bank and Kotak are down. In fact, this month, Hdfc Twins and Kotak are all down about 4.5 to 5%, which is very, very interesting. And one more stat, while we're talking about this broadening of the rally, just a closer look would say that perhaps, again, the market's getting a bit more narrow again. This month, in fact, Reliance and TCS have contributed half of Nifty's rally. 1% of the 2% move has happened because of the two largest stocks in the market.
The beneficiaries of the rupee depreciation.
The beneficiary of the rupee. So that now, the big call you need to take is, the market is still at new high. It's not, it's not fallen.
No,
so
it's not.
Risk reward wise, what do you want to do for today? Because the expiry is also out of the way. If the Bank Nifty defends yesterday's low, I think in that case, the Bank Nifty could actually have a rally today, because, it fell yesterday and there was expiry, so there was some selling pressure. So I would want to see if yesterday's low is defended on the Nifty Bank. That perhaps gives you a better risk-reward trade than perhaps chasing the Nifty move where, the market is, the index is at an all-time high.
Yeah, actually, my reference to the Bank Nifty's negativity is only at the start. Yeah. Because as we go along, we are expecting the Allahabad court judgment. Now, if there could be that, there could be some other issues. The State Bank is trying very hard to ensure that about 7 cases move out of the NCLT, and their deadline is actually August 27. RCom has just announced that they have signed a 2,000 crore deal with RelGeo to sell their media nodes. So, you know that RCom sale is also progressing inch by inch. All these can also be bank positive. So while the start may be negative because of wherever the rupee starts or wherever the yield starts, there could be a lot of these incremental news which can give reason for people to buy banks.
Okay, well, since we're talking about banks, Anuj mentioned Axis Bank and how it's gained almost 15% this month. You think it could be in the run-up to the move that Amitabh Chaudhary is seeing from HDFC?
Well, I got the news today. You know, after this share sale, once again I worked the phones, and it was an almost unimpeachable source who said that yes, it is Amitabh who's coming by. So it now looks that you do. I mean, I can't take this source lightly at all. So that's why I chose to put it out, because all these days everybody tells you several things, and I choose not to flash. But this one sits above board, and therefore Amitabh Chaudhary is moving as Axis Bank chief. Now, there is also the other way that people are looking at. Suddenly, you're going to have an HDFC Bank without Suktankar now, and in another 18 months without Aditya Puri. And people start asking you, when has there been a company which has been able to generate iconic leaders for a second time? So there are those doubts as well, which explains why Kotak and HDFC Bank, for their own reasons, are a bit under the weather. I mean, in 18 months, Aditya Puri can easily put in a second rung. But at the moment, that's what's keeping them down, and money is moving to corporate banks where the bad news is behind them.
And exactly, and I tell you one thing, perhaps 12 months from here or 24 months from here, you'd look back and say, what a great opportunity Kotak presented to buy, what a great opportunity HDFC Bank presented to buy. These are institutions. And I think the biggest example really is, you know, when Raghuram Rajan quit, right? I mean, you thought that perhaps this is the end of banking for some time.
It's not comparable, Anuj.
No, I'm just saying this, you know, institution, start of the bull market.
It was like 3 years, and India is too much more than any one person. But Aditya Puri means a lot to HDFC
Yes,
Bank.
but you know, that's an institution. I think they've created institutions where, you know, it's almost run on autopilot now, and of course it matters, but
no, but there is that fear.
They will fill
I'm only referring to the way investors behave.
No, I guess what he's saying is that no man is bigger than the institution. But you know what? That's for HDFC Bank shareholders. What about Axis Bank? Because rallied already 15%. Of course, Amitabh Chaudhary comes with a great background, HDFC Life. Before that, he was heading the Infosys BPO as well. You think all of this is in the price, or maybe there could be
Well, that's difficult to say. I mean, after all, it's only a sentiment. And he takes over really on Jan 1st, even if he comes in September or October, 3 months with Shikha Sharma. I think that Axis Bank share is rising also because, as in the case of all corporate lenders, the worst of the recognition is over. And Axis has advantage. For instance, today Ruchi Soya, Ritu Singh broke that news overnight, and we will invite Ritu Singh to speak about it again. Axis is a lender to Ruchi as well, to Ruchi Soya. And then you have the SR case that's going to get decided. I mean, it's at the NCLAT. Sooner or later, either in the September quarter or in the December quarter, that big chunk of money will come. And therefore, there is a lot of good news where all the bad news is receding and the repayments are coming in. So for that reason as well, Axis, like ICICI, has every reason to rise.
Okay, so top management changes promises to be a very exciting next few days. Let's see how all of this shapes up. For now, let's take a look at what our wise experts have to say as we head into trade this morning. Christopher Wood of CLSA says a systemic event in financial markets is more likely to be triggered by Italy and the Eurozone than other candidates currently discussed by pundits, be it a Donald Trump-triggered trade war, a much-anticipated Chinese currency collapse, or overvalued Wall Street FANG stocks. Still, he adds, they are all interconnected phenomena.
Okay, yes, we all know the red flags. Actually, when the red flag came, it was the most unexpected Turkey and not any of these. Let's get you some Indian equities-related views. Rhythm Desai of Morgan Stanley says Q1 FY19 saw strong revenue growth trends across sectors. He says breadth in revenue and net profit growth improved. He adds Nifty companies' revenue and net profit growth was 17%. Revenue was 17%, net profit was 4% year on year. But he says if you exclude SBI and Tata Motors, then the revenue growth is 24% and the net profit growth is 20% YOY. So that's not a bad performance.
Okay, and let's also get you some money market views. It's been all about the rupee, right? It's back below that 70 to the dollar mark. Bhaskar Panda of Hdfc Bank says as far as India is concerned, firm crude prices against an undertone of global uncertainty is going to guide levels here on. He expects the dollar-INR to trade above the 70 mark today in a range between 70.10 and 70.25.
Okay. And on bonds, the Indian benchmark bond yields have remained a little elevated but docile, says Bhaskar Panda. He expects the 10-year benchmark bond yield to remain in a range of 785, 790 for the day.
Okay, of course, the key talking point was Donald Trump's interview, but let's talk about the overall global setup. Here's Nigel with the world view.
Well, it was a subdued close, actually, on Wall Street. All the three frontliners, they ended in the red. Two big reasons really played out. One was that yesterday we did see tariffs being imposed on 16 billion worth of Chinese goods. That was one factor. The second factor is that, in fact, the legal issues that are surrounding President Donald Trump as well. The trade war worries, well, that impacts a couple of global players. So we had Caterpillar as well as Boeing. Both of them were under some pressure. But there was some profit booking seen on select stocks as well. The likes of Netflix as well as Alibaba. Both of them ended with cuts of around 2 to around 3%. But the big talking point was really Donald Trump's interview. And he said that if he gets impeached, then these markets are going to crash. And in fact, everyone will lose a lot of money. So that was a big headline that came in overnight. European markets, though, in yesterday's trading session, well, all three of them ended in the red. Trade war worries returned yesterday. We did see basic resources were under some pressure. Auto stocks as well did come in for profit booking. Second day running out there. But in terms of the currency move, well, the dollar has strengthened overnight, so that's not very good news. And we did see that, in fact, even the yen has weakened a tad bit. And that's why we have the Nikkei that's holding with some mild gains in today's trading session. Asian markets on the whole, barring the Nikkei, more red than green is what we're seeing. And we had some Japanese data as well that did come out. That was a tad bit lower than the expectations of the Bank of Japan. Brent crude prices have spiked up, and that's not great news. For starters, SGX Nifty is suggesting a 30-point downtick. Back to you all.
All right. Well, let's take stock of how the global situation is, since we seem to be getting constant irritants in the form of tariff wars and tariff impositions. James Glassman, senior economist at JP Morgan, joins us on the phone line all the way from the United States. Good evening, James. Thank you very much indeed for joining us and sitting up for us this late. What's your sense about this entire, accusations against President Trump? Is impeachment really something the market should consider?
Oh, I don't know. I think this is there's a lot of uncertainty about this, and I don't know that this is really on the minds of the markets. You know, what's interesting to me, as you said, there's a lot of this trade issue is really an irritant for the market because it creates a lot of uncertainty. But you have to ask, why is the U.S. equity market sitting at very high levels, near record levels? I think the markets must be assuming that this is really part of a big negotiating strategy, and this isn't going to derail the global economy. And in fact, most economists are forecasting pretty strong growth for the U.S. economy for the next couple of years. We don't see much change in the picture globally. So, I think this is really more something that's affecting sentiment in the market. But honestly, in terms of the political drama that's going on right now, I think this is this is a political story. Okay, and it's going to take a long time to figure out.
Okay, let me put the question on its head then. We've seen this steady rise in the US dollar, and that's largely because, as you said, the US economy is firing so well. The last GDP number or the earnings growth can only push the dollar higher. And would that mean, therefore, terribly bad news for emerging markets? And when you add to it the eventual crunching of the Fed's balance sheet?
I mean, by itself, you could argue that if what's happening here is the Federal Reserve is pushing interest rates back to higher levels, that becomes a bigger challenge for emerging markets. But the way I think about it is, if the Fed were not doing this, here the U.S. economy is sitting at very low levels of unemployment. it would be equivalent if the RBI had their repo rates at 4% with inflation running 4 to 5%.
James,
that's where the Fed is right now.
James, I'm not blaming.
That's where the Fed is.
I'm not blaming the Fed. I'm only asking you what will be the implications for emerging markets if the Fed balance sheet were crunched and dollar rose.
I'll tell you what, I think long-term good. Short-term not, maybe short-term a little challenging. Long-term good, because the sooner the Fed can normalize interest rates, the more likely it is that the U.S. expansion stays balanced and continues. I think the most important thing for emerging markets is to have these developed economies not run into some new inflation problem. So I think, the normalizing policy rates is a normal part of the process. If they weren't doing it, I think that would be bad news for the emerging markets, because the last thing we need is for developed economies, after having gone through these recoveries, to have them run into inflation problems. That would be a real nightmare for everybody. And the last thing you want to see is an inflation problem brewing in the U.S. that forces the Fed to have to do something even more severe. So, near term it's challenging, I think. But honestly, most of what the Fed is talking about and what we are expecting has been discounted in the markets for several years. So it's not like this is a new story that's sort of erupting on the scene this year. This has been a well-telegraphed program. And so I think for that reason, probably the bigger irritant for the emerging markets is just this trade tension that's going on. And I'm not sure what the purpose is. It's certainly not bringing people to the table.
Sure. James, hi, good morning. The U.S. bull run has been the longest ever that we've seen. I mean, it started way back in 2009. And as you alluded to, it's because of the kind of growth that we're getting from the U.S. itself. What stage of the economic growth-related bull run are we in right now? You think it's reached a mature stage, or is there more to go?
There's probably more to go, and a lot depends on whether the expansion, now that it's returned to full employment, will continue on, and I think it will. So personally, I think, although it's mature, that now, if everything goes right and there's no new problems, no new inflation problems, no financial imbalances, then there's no reason to think that this has come to an end. So I think, when you look at the long sweep of equity markets, I personally think one of the bright spots for the equity markets globally is what's taking place in Asia. So if the developed economies continue now turn into more steady growth, and it allows the developing economies to continue on this path, there's a lot of market opportunity that comes from that. And for me, from my point of view, that's a real big positive for the long term for the equity markets. So I think it's way early to be thinking about the end of a bull market.
Okay. Well, we don't want to think of it that way at all. Thank you very much, James Glassman, for joining us. So absolutely no doubts about the U.S. economic growth pace or for the pace of earnings growth in the United States, and that can only have a beneficial impact on the global economy. That's a positive view coming in from James Glassman. Not to worry about dollar strength and crunching balance sheets of central banks. We take a break on that note. We are coming back and then we talk all micro. Our entire research team is here to detail to you the top 10 list of stocks to watch for the day.
Hi guys, good morning. We're kick-starting the last day of the trading week with some negative cues. The SGX Nifty is under a bit of pressure. The US-China tariff talks have ended with no breakthrough, so there's a bit of disappointment across the Asian markets. Hong Kong is down about 200 points and the Shanghai market is also under a bit of pressure. But our research team is here to give you the list of top 10 stocks to watch as we head into trade today. And as always, we start with the captain of the ship. Anuj, what are the stocks you're looking at?
So one on the green and one on the red side, Sonia. Larsen and Toubro, I know it's run up a lot, but the kind of buying it's seeing for last 3 days, it's almost a leadership, role that it's taking over now. 8% off its highs despite the rally. So, of course, today, you would want to see how the market is reacting, overall market. But from the lows, perhaps this could be an interesting stock. And I think Vedanta on the way down. It's a bear market rally which is showing signs of ending. The global cues, the fact that this whole US-China issues are resurfacing. So could perhaps mean metal stocks are under pressure. And this stock is now trading within 7% of a 52-week low. So that could be an interesting one.
Okay. Well, yesterday, of course, L&T had that huge number of 9,000 crore to react to, and it reacted to it. We will have to see whether there can be a tailwind a further follow through. But Sonia, you're a little despondent about the news on Tata Motors and Motherson Sumi.
Yes, you know, the European auto component maker Continental AG, which is the second largest global supplier in the world, has lowered its revenue guidance for 2018. And when they lower their guidance, you sit up and take notice because of the kind of reach that they have. Now, the reasons they've cited is that the European Union and China, the slowdown is much worse than expected, and the higher costs for the EV technology, which, you know, have to be made, and warranty claims will also go ahead and impact profitability. Now, why our antenna has risen is because EU and China are the two markets that Motherson Sumi and Tata Motors have the highest exposure to. So Morgan Stanley has said that 46% of Motherson Sumi's EPS comes from the global passenger car market, so they could be impacted, and JLR could also get impacted. Almost 30% of Tata Motors JLR sales comes from China, and there is a slowdown underway there.
Yes, so that's something to
watch out.
Yeah, that's something which is going on with Tata Motors for some time now. But you know, yesterday, of course, we had that big block on MGL, and that stock ended at the lowest point. Nimesh, this morning, of course, yes, overnight you broke the news on Hexaware. Something similar could be expected here?
Yes, Anuj. You know, so the promoters, Barings Private Equity, are selling close to 8.5% equity in Hexaware today via block deal. The deal is offered at a 10% discount to yesterday's closing price. So probably you'll see a deep red in Hexaware in today's trade. It's a $170 million book which Sid is going to do and execute today. The interesting part is Barings Private Equity owns 71%. They are selling 8.4% stakes. They'll bring it to 60 to 63%. But what I understand from sources, they intend to bring it to 51%. So there would be a supply hangover in Hexaware over the next couple of months. But today it will deep red because of 10% discount offered in the block deal.
Okay, speaking of hangover, Nimesh, the mother of all hangover will be on Bandhan Bank. You know, the Bandhan Bank, the promoter, that is the non-operating holding company, owns 82%. The rules require that they have to come down to 40% in 3 years. 3 years ended yesterday. Now, they have been talking to Reserve Bank to say that this is too much to be sold off too soon. And, you know, I don't know how much the market will react to the same news. That's why Bandhan Bank was down yesterday, because that's when the third year ended, that Thursday. That's why they had their Foundation Day celebrations. But I don't know, it could persist as an overhang. My sense is that there is no choice for the Reserve Bank but to give an extension, because otherwise this is too market disruptive. I'm wondering if this will make Kotak shares rise. Because if you can give an extension to one, you can always give an extension to the other. So if the market speculates that this is an inevitable case of deadline extension, then why not a deadline extension to the other? So it could be taken positively for Kotak.
Okay, well, we keep an eye out on that. Kotak, of course, over the last 2-3 months has been all over the place. It's not done much. I guess so much uncertainty about this and that. Yesterday as well, Kotak was down about 1.5%. But you're watching the bond market as well?
I think I just said that when we were chatting about the markets. There are a couple of bond negatives. One is the July Gst Sales, which our team from Delhi broke. The numbers very preliminary, because the last day of paying GST is today, August 24th. So the number will definitely evolve. But the early signs they got is that it's likely to be around 91,000. Now, even if it comes to 94,000, it's exactly as last year's level, but way away from that 1.03 lakh crore at least that you need for a monthly tally. And now we are 5 months down and we are a distance away from 1.03, which means you have to do much more in the subsequent months to come to the average. The market will worry that this could mean higher fiscal deficit. And then I already told you about oil and, weaker rupee. Both these are inflationary items. And therefore, if it is a question of yields going towards 7.9, at least banks and NBFCs will start on the back foot, and we'll have to see thereafter.
Okay, well, let's talk about some more stocks in the news then. Sonal has that list for us. Sonal, over to you.
Thanks a lot for that, Sonia. Well, I'm watching out for 2 stocks because of revision in the credit ratings of those companies. For TNPL, Care has revised the long-term rating to BBB+ from BBB. And for Jubilant Life Sciences, India Ratings has upgraded the company's long-term ratings to IND-AA stable. And it has also affirmed company's short-term ratings. So those 2 stocks will be in focus today. Back to you.
Okay, thanks a lot for that. So those are the list of all the stocks that we're looking at. Here's a quick recap then. Stocks with positive news flow: L&T, Axis Bank, Tamil Nadu Newsprint and Jubilant Life Sciences. While stocks with some negative news flow this morning, Vedanta, Tata Motors, Motherson Sumi, Hexaware, where that supply hangover could be there, Bandhan Bank, the Nifty Bank, SBI, Bank of Baroda, M&M Financial and Diwan Housing. But as we just mentioned, GST collections could slow down in the month of July. Sources say that the mop-up could be around 90,000 crore rupees, which is, remember, below the collections that we saw in the month of June, which was over 94,000 crore rupees. So why this slowdown and what could the details in the numbers look like? Timsi Jaipuria joins us with more on that. Timsi, what's behind the slowdown?
Well, GST collections may come in as a surprise for the government, as collections for the month of July are likely to be lower on both accounts, that is a year-on-year basis and a month-on-month basis. Sources told CNBC TV18 that collections may range in 89 to 91,000 odd crore rupees for the month of July, which will be reported in August and which will be announced by the government formally on 1st of September. Remember, last day to file GST returns in August is August 24 and October 5 for taxpayers in Kerala, which will be officially announced again, yes, on September 1st. Last year, the GST collections for July stood at over 94,000 odd crore rupees and collections for June this year were over 96,000 odd crore rupees. Sources say that there are various reasons for a decline in the collections, such as low consumption in the last few days of July as the rate cut was announced on July 21. Also, monsoon traditionally is a season of low sales. This, coupled with less number of returns being filed, which is around 60 lakh returns till date, and most importantly, an impact of Kerala floods too, which has added to a slow return filing by corporates. Meanwhile, government officials told CNBC TV18 that next few months are going to be even more crucial for GST collections, as the impact of GST rate cuts announced on July 21 will reflect in August and September collections, which will be officially announced on October 1st and November 1st. Let's see what are the final figures and how much of a worry do they become for the government when it comes to meeting the daunting revenue collections target. Back to you.
Okay, thank you very much. It does sound daunting, but I must warn that a lot of people pay on the last day, and the state of Kerala, of course, is going to get 1.5 months more to pay. So, you know, maybe we shouldn't be jumping into conclusions. But here's an exclusive, and this is something that will be very positive for banks. Ruchi Soya's lenders have approved the resolution plan submitted by Adani Wilmar. Remember, there were rival people, with Patanjali also throwing its hat in the ring. Ritu Singh, who broke this story for us, is joining in with the details. Ritu.
That's right, Lata. You know, last night, the voting on the resolution plan for Ruchi Soya concluded, and we've picked up some sources that over 96% of the committee of creditors ended up voting in favor of Adani Wilmar's plan for Ruchi Soya, which was declared H1, or the winning bidder, over Patanjali, which had offered a slightly lower bid for Ruchi Soya. So currently, the plan that has been approved includes a payment of 6,000 crore rupees, in which about 4,300 crore rupees will be repaid to lenders and 1,700 crore rupees will come in as equity infusion in the company, which, if you look at the debt of over 9,000 crore rupees, is a haircut of close to 60% that the financial creditors will be taking. So now the next step will be that the IRP will file this resolution plan with the NCLT for their final approval, and that should be done today itself. Of course, the approval itself may take a little more time to come, but in the meantime, Adani has already secured a CCI approval, that is the Competition Commission's approval for the acquisition of Ruchi Soya, even before the lenders approved this resolution plan. The largest banks that you mentioned that would benefit a State Bank of India, Central Bank of India, PNB, Corporation Bank, ICICI Bank, IDBI Bank, and Bank of India, that are some of the largest lenders among the 24-odd financial creditors to Ruchi Soya.
Oh, thank you very much for that, Ritu. That's extremely useful information. And this is what I meant, you know. No matter what the macros say, the fact that these kinds of incremental good news will come can easily compensate and make the banks look better, or at least stop the losses. The important point here, I mean, just to add by way of detail, this is not a P&L impact, because most of them have provided 50%. Now, out of the 9,000 crore that banks have as exposure, Adani Wilmar is paying 4,300 crore to the banks. The remaining 1,700 crore is to revive Ruchi Soya. So basically, they gave a 50% provisioning. That 50% is coming back. So what will happen is you won't get a P&L write-in. What you will get is a reduction in NPAs all their NPAs will look lower. It's an optically positive thing, not a P&L positive, but nevertheless overall positive for the banks.
Oh, absolutely. Reduction in NPAs is always welcome, right? I mean, that's something the street has been waiting for so long. Let's take a short break on that note. On the other side of the break, how do you approach the last trading day? Our technical gurus Ashwini Gujral, Mitesh Thakkar and Prakash Gaba will join in.